my idea to help affordability was that Tesla tackles the financing market in a different way. Up to a year ago, up to exactly beginning of 2022, they mainly outsourced financing. So when somebody was looking to finance a Tesla, they would approach third-party banks, the big lenders, whatever, depending on which market it was, Europe or China or the United States, and would just broker it through, get a little commission for it. You actually see the commission in the 10Qs and 10Ks. And then that was it. They wouldn't take it on their own books. Then they started doing it in the first half of 2022. I'm getting later to those numbers. So they have started financing. Initially, I have the feeling mostly in China and Europe. That needs to be confirmed, but I didn't find information for the US for the first half of 2022. And now they're slowly doing it in the US as well. So I wanted to put these slides together so that we understand how important financing is. And no, I'm not saying, just because I can already see it coming, I'm not saying that they should do what Ford and GM did and get over the heels into financial troubles. But you should also know that Ford and GM, and we'll probably see it with today's numbers again, are mainly profitable because of their financing. There is lots of money to be done. And as I explained earlier, it is actually a buffer for crisis times, because you can suddenly put out very attractive financing rates on which you make a little loss, but you keep your prices up, right? So yes, it will be a little loss, but it won't be a 20% price cut. Now, let's walk through it. So currently in the US, and I don't have for all the markets, all the data, but I try to be as complete as possible. In the US, 83% of new cars are financed. This number has been stable, over 80% all the time. Used markets don't look at it, that's those red bars. So 83. Of those 83%, 20% are leases and 63% are financing. So only 16% are cash buyers. Next slide, please. So the same day we got our second investment grade rating. Remember, we had in October the S&P upgrade, and then in March 20th, the Moody's one, which should help us with being able to refinance and get money if we don't want to stem financing from the cash position. The New York Fed published this survey where it says very clearly that in the recent months, the rejection rate for auto loans has increased from slightly under 6% to slightly over 9%. So it's not a huge number yet, but it has clearly taken a 50% increase from 6% to 9%. Let's go to the next one, which is who is financing. So this is over 4 years. Keep in mind we had COVID. But what I wanted to point out, I don't know whether you can see this, is the credit unions had a big spike in 2022 because the captives, so the captives are the Ford financing and the Toyota financing, whatever, the captives went down and had to go down because of other trouble they had. And the credit unions went up, which is obviously in today's environment in the US, an issue, because as you know, the smaller banks have problems getting refinancing and all the rest. So this 2022 movement here that you see in purple is part of the trouble we're in at the moment. This is only for new cars. I try to always concentrate only on new cars. You can go to the next slide, please, Herbert. So this is what Elon is talking about. Interest rates for a 60-month new car loan, 5 years is about the average usually, went from, well, our nearly zero interest rate period, so it was slightly above 4% for car financing, to now well above 6.5%. So this is the rate. I also looked at longer charts, and there is one later, and we had car financing periods over 10, 12%. So yes, the last 10 years were very comfortable, and it didn't cost a lot to finance a car, but it is obviously very recent that car financing has become much more expensive. Then the next chart is that this reflects, of course, in monthly payments. So here I come to affordability. So this is the 4 credit score from deep subprime to prime. And you see that the average monthly payment has moved up nearly for everybody now between $510 and $550 due to the increase of the interest rate. And then, if you don't mind flipping to the next one, That was after the earnings call. So that's one of my tweets where I explained it really would help affordability if Tesla would argue monthly cost and getting that monthly cost down by now offering financing. Why am I so much after financing? And I've been hammering this for 6 months and I'm getting a lot of heat for it. It is because by brokering through the financing to the banks, we just saw the banks are not the biggest bringer and the smaller banks are not doing it anymore, you actually increase the price for the Tesla buyer by the brokerage fees, but also by the fact that these banks want less and less financing to be done. And we get to that point. That's my last slide later on. There are just so much fewer banks who want to finance Teslas now, and there's a good reason for it. So let's continue. So this is the 10Ks and the 10Qs from Tesla. So yesterday I put together these columns, and I'm sorry, I hope it shows on the screen enough. So by middle of 2022, you have the first column, which is how much of these loans that Tesla has on its own books is repaid within the first year. Then it goes into the account called accounts receivable. That's the first 12 months. Or how much has a longer liability. So it's a non-current asset for longer positions between 1 year and a day and the longer position. So end of June, there was nothing coming back in the first year column, but they only pointed out the 320. I think that is a reporting issue. I'm sure part of that would have been actually in the accounts receivable, but they corrected that only a trimester later. So the total amount financed was $320 million. That's for worldwide, China, Europe, and the US together. 1 quarter later, they now split it up between coming back within the first year and coming back in later years, was 76 for the first year and 398 for the later years, so a total of 474. So this 320 amount got added to about 154 million, okay? And by seeing this split, you can calculate that this longer period actually reaches out to 5 years, right? So the first year plus 5 other years. So they're financing for a 6-year period. And then you have it for end of December. So there, the coming back in the first year amount was 121 million, coming back in the following year, 665. So the total now 786. So there they started really to increase the amount they're doing directly, still with assets around 5.5. And then in the last quarter, 191 in the first year, 966. So now more than 1.1 billion. Now, just for all those that are already screaming, oh my God, credit risk and all the rest, this is 1.34% of cars sold, right? This is nothing. This is really, this is a small amount. And even if it doubles and triples, this is really absolutely nothing. So why did I put this up? They have started doing it. They've started doing it prudently, moving it up in volume slowly over the last 4 quarters. I think we're going to see much more. I've published on Twitter this morning, Norway, Spain, Portugal, Japan, Singapore are all seeing 10-year loans now. Now, it could be that Tesla finds third-party banks that take these on. I don't think so. Especially in the US, where we don't see them yet, none of the lenders I checked, and I checked loads yesterday, would ever go over 8 years. And 8 is already very rare. I found some 8 offers with Chase and with Capital One, but I didn't find many that proposed 8 years. So there may be, I heard of Santander in Europe doing some refinancing for 10 years and whatever. So who knows? But it seems to be that Tesla is trying to break into that. So my idea was that Tesla uses this inverse and relatively flat yield curve. This is the treasury yield curve. Obviously, you have to put a spread on that to get to the auto loan prices between the 6 years and the 10 years to find the spot. Maybe 7, maybe 8, maybe 10. I don't know, for a couple of reasons. First of all, Teslas have a longer lifespan than any other cars out there. And the resale value during the 10 years seems to maintain much higher, so that if they stop lowering the prices, of course, but the theory is that you also always know where your Tesla is. So if really it would come to a repo, Tesla would have the information to find the car very quickly and make it undrivable and then pick it up or even summon it once we're there. So that's the theory. And the next slide shows what a difference it would make financing the same $50,000 car over 6 years rather than 10 years. You would actually go from a monthly payment of $750 a month to a monthly payment of $500 a month. So and again, in the US, there's nobody who would be the third party to it. So if this is an idea, it would have to be on Tesla's books at the moment. And I didn't find any law that or any one of those regulations that would not allow Tesla to do it longer than 8 years. It seems to be there's still two slides, if you don't mind. Especially my last point. I think my last point is the best one. So if you don't mind the last two, there's actually two. So this one is showing the difference between a 6-year auto loan rate, that's the yellow line, and I know it shows very little, but that's the Federal Reserve, compared to a 4-year auto loan rate, right? And we're currently in one of those rare phases that we were also between 2008 and 2012, where the longer auto loan had come at a cheaper price than the shorter ones. But I just wanted to show that over time. And here you see the beginning of the 2000s being close to 10%. And then the next slide is actually Elon's tweet saying it's becoming harder for people to get car loans. That's why I say, please don't do it yourself, because one of the reasons why it is harder, and I really, if I want you all to take one thing back from it, is this is because Tesla shoot themselves in their own foot by making the price variable. And I mean, this may be a great growth strategy, Herbert. I'm not saying this is a bad strategy, but you're actually putting the former lenders, the banks that lended so far to Tesla owners the money, in a very bad position, because these banks have the Model X at 120,000 on their books, right, and have a certain repo rate with which they have to deal with, and now suddenly it is at 90,000. They have an issue with those 30,000, right? And the same for the Ys. So and that's been very well explained in the last slide by a banker who did a very good thread called Case Alberta at masto.ai. I really recommend you read that through. It's about 10 tweets long, but he really explained how these banks today are very hesitant in giving loans out for Teslas, because if a week later they suddenly have to readjust their pricing in their books, it's a loss. It's an immediate loss, and it's difficult for them to justify that over multiple months. And so that is the main reason why Tesla drivers have problems today of finding third-party banks. And I think Tesla should step up. If they believe that their policies and their politics and their strategy is the right one, well, then take it on the books you and make it affordable to your clients again. That's it. Yeah.
I mean, what I heard there was that if Tesla does financing, extends it to 8 years, brings down the monthly to $500 per month, that's getting very close to the cost of gas per month for some drivers. And so then it becomes this idea that instead of paying for buying a new gas car, paying for a monthly $500 or more for gas, I'm going to go ahead and lease a Tesla for $500. Right? It's a no-brainer at that point. And then that allows Tesla to move to a subscription model.
Sure, because everything is on monthly then. Yeah.
It's a monthly.
I just want to say thank you, Alexandra, for going through that. That was great. And I think that was great and valuable to the audience. So thank you for all your work you put into that. I really appreciate it.
Thank you, Christian.